Bloomberg Audio Studios.
Podcasts, radio, news.
Single best idea in the first full week of the year, jobs report on Friday. Goldman Sachs coming out with a tepid look. Thank you, David Miracle, for sending that over. Consensus is 160. I don't know where the whisper number is. Michael McKee knows that. But they're down at 120 with an elevated unemployment rate to 4.3%. Just one view of that from Jan Hatzius and team over at Goldman Sachs. We spoke with Seth Carpenter of Morgan Stanley today. Wide-ranging discussion, really interesting. And one of the great things we talked about was just the state of the economy and the path forward. Here's Seth Carpenter of Morgan Stanley.
So I think every year there's a bit of revision. I suspect there is a good chance that we're going to see a bit more of that. I think in the near term, right over the next 3 months, that so-called residual seasonality that we've seen in the PCE inflation numbers, I think that's a real possibility here that could throw a real curveball for the Fed. I will say the numbers on employment, right, given how much immigration we've had over the past couple of years, and as the BLS tries to catch up with sort of their different surveys, I think we could see some more revisions. This year, 2025, is probably the most difficult forecasting year since 2020 and maybe early 2021 when we had COVID. I mean, this is a really tricky year for forecasting.
That's a really important comment from a guy who worked at the Federal Reserve, at the Treasury, and of course his work at Princeton under Ben Bernanke a number of years ago. Further, Seth Carpenter here, not so much like getting a crystal ball out and gaming the future and all the marketing blah, blah, blah forecasts. He talked about the risks ahead.
You know, usually we do our year ahead forecast and it's supposed to be a bit of a roadmap for people, but now this time around, it's more of a set of risks and how to start to create a framework for those risks. So for economic policies that might move the macro needle, you know, we break it down into trade policy, tariffs, immigration policy, fiscal policy, and then deregulation. And what might be slightly controversial is we've said for those last two, fiscal policy and deregulation, maybe move those off the table for 2025 for macro implications. Deregulation, I think, is going to be huge at a micro level, and definitely for individual sectors and parts of the equity market. But in terms of GDP, inflation, that sort of thing, I'm not convinced it matters at all for at least for 2025. Similarly, fiscal policy, we're at least for now assuming the Congress spends the better part of the year extending the tax cuts. And so, again, it takes it off the table for 2025. So we're really looking at tariff policy and immigration policy as the key factors here.
Seth Carpenter of Morgan Stanley. The view forward is simple. An eventful year. There will be a focus on international relations, the politics of America as we move to the inauguration. But I really have to say we're going to stay focused on markets, on equities, bonds, currencies, and commodities. And I have to say, front and center for me right now is gleaning the dollar. I came in today on my Bloomberg Launchpad. I probably have 20 currency pairs, I'm guessing, and all of it was quiescent except, and those are the kind of things we're going to try to bring to you, except today was a Chinese yuan with a 2-day jump condition weaker from the very managed trend that you see out of Beijing. You wonder, is a weaker renminbi in order here as a solution for the horrific real estate domestic finance crisis? And a commute across the nation on Apple CarPlay, Sirius XM, Android Auto. Good morning to 99.1 FM in Washington, up to our flagship in a congested New York, Bloomberg 1130, and up to 92.9 in New England and Boston as well. On podcasts, the best path to YouTube podcasts. This is Single Best Idea.